Hello, everyone. Happy New Year. Welcome to 2025. Today, we are talking about the biggest lessons that we learned from 2024, the biggest do's, the biggest don'ts. And I want to hear from you guys too. So, first thing that I'd like you to do is type into the comments, let me know that you're alive. As we're going through this, I want to hear what are some of the biggest lessons that you personally learned, whether it's things that you want to do, things that you want to avoid. I think that that's important to have both of those lists. So go ahead, type some of that into the chat and we'll get going right now. But to kick things off, I want to share with you some of the biggest things that I learned personally. So these are the top 5 takeaways that I have from 2025. 2024. Sorry, we're already in. We're in 2025 now. So the 5 biggest do's, right? So number 1, sizing up when things are working. Makes a lot of sense, right? When things are working, we want to be betting our biggest. When things are not working, we want to be betting our smallest. That's actually number 2. Size up when things are working. Number 2, scale down when things are not. So the question becomes, how do you know when to do that? There's a couple of ways that we can learn to do that. And so here's some of the ways that I integrate that into my trading, more so, even more so last year than in prior years. And the thing that I do is run everything through these 3 lenses. Maybe some of you have seen this defining market mood chart. Maybe some of you are seeing it for the first time. But by running my trades through the general market, system, and personal performance, that's how I'm able to know when to step on the gas or step on the brakes. One of the big things about the market is that it moves in cycles. And it's not just where there's a spring and summer and fall, winter. It's not just that. It's not just a quarterly thing. Well, the market will move in cycles where you'll get a whole bunch of winning trades, trades that fit your system, trades that fit your style all at once. And then it will start to wane, and then it will start to go down, and then it'll pick right back up again. And this type of cyclical nature repeats itself over and over and over again. Now, we don't know exactly how long each wave will necessarily be, but the market gives clues on which wave we're in. How does it do that? Through this, right? So when we know what the general market is doing, most stocks follow the general market, meaning the major indexes and what the major indexes are doing across time frames. Perhaps you've heard that the market, most stocks will follow the general market. About 75% of stocks will follow the direction of the overall market. That's the major indexes. It's also the other stocks that are within it, right? So it's like taking a look, broad macro look at the major indexes. So actually, why don't we pop open some charts and see what the major indexes are doing right now? And let me see. Here they go. All right. So right now, we can see that for the most part, the major indexes are slightly down from the recent highs, right? Even the S&P 500 and the NASDAQ, they've pulled off their recent highs. The Russell, the New York Stock Exchange, and the Dow, they're all below that red line. That's a 50-day moving average, an important line in the sand. So what does that tell us? That tells us that majority of stocks are pulling back in. Some of them are beginning to level off, and some of them are at a point where maybe they're hitting some resistance, maybe they're not. That's where the major indexes are. That's where a lot of stocks, if we dive in deeper and take a look at the stocks that are in those indexes, that's where many of them are too, right? So, what tends to happen when stocks are caught between support and resistance, they tend to bounce around, kind of like a tennis ball, right there that's getting compressed and compressed and compressed, and then when it's finally able to break through either up or down, that tells us the direction that we're getting ready to go. So if trades start to work, right, and this points towards the cyclical nature of trades, let's say that we can draw a descending trend line on the S&P 500 and on the Nasdaq. You could might be able to draw one pretty clearly right over here on the Russell and the NYSE and the Dow, right? They're all trading right below that green line, that 10-day exponential moving average. Let's just say that they all break out to the upside. Maybe that happens sometime next week and you start to see them moving in earnest. What would that tell us? One of the things that it might tell us is that there's a change in direction. And if that change in direction starts to sustain itself, right, by having continuing to move up on the indexes, starting to see more stocks following through, then that's one of the things that might tell us, hey, one of those other waves, one of the waves for our style is coming in. Time to hop on board, time to step on the gas a little bit more. And that's how we know when to size up when things are working very well and to scale down when they're not. I just I just got off of a call with members in our trading accelerator program, and we're talking about this very thing. We call it progressive exposure, and taking a look at the stats from last year, and last year had a very good run. In fact, let me pull up the stats from last year, and I'll share my screen once more. Right, so here's the stats from last year, and let's make this a little bit bigger so you could read it. One of the things that jumped out to me, right? So this is from last year, 2024. One of the things that jumped out to me was that most of the big wins happened in 3 months. Most of them happened in June, in October, and November. Just by looking at the stats, right? June, average gain 12%, average loss 2%, average win rate 50%, right? So half the trades were making 12%, half the other half losing 2%. That's going to give you a real good month. Similar numbers in October, right? Move my face out of the way a little bit. Similar numbers in October, and even better numbers in November. So what does that mean? Well, that's one of the things that ends up pointing towards that cyclical nature of trading, like I was telling you about before, that most of the big trades will come all at once, and the losing trades will tend to, you'll have some strings of those, and other times you're just kind of moving sideways. So since we know that that's the case, then the question to ask ourselves becomes, well, how do we manage that? Because if we can figure out how to bet heavy when things are working and to lighten up when things are not working, then we could make numbers like this turn into a really amazing year. And that's exactly what we did. So, how do you do it? This, right? It all comes back to this, understanding where you're at in the market and the way that you actively track that, you do that through a journaling process. One of the journals that I have, we were actually just looking at my journal. There's multiple tabs to this journal here. One of the tabs is the market mood log, which is all the way to the left, and I'll actively track like well which way the market is heading and things like distribution days. There's a lot of data on here. Distribution days, new highs versus new lows. I'll actively track the stocks that are setting up, the quality of those stocks that are setting up, and a variety of things in here. And so all of this is what gives me that real strong sense of should I be stepping on the gas or hitting the brake. We teach a lot of that. I aim to teach a lot of that on my channel, and I want you guys to uh, ask questions. This time is here for you, so please ask questions on any of this. But the thing about it is that you can't you can learn from people, but we all need to go off and learn and do this stuff ourselves because that's how you start to be able to act in real time. That's how you start to grow in your beliefs of, hey, yeah, I understand how my system works and when to place this trade and scale up and all that. And you're not waiting for somebody else to tell you like to to turn left if you're driving a car and you don't wait for them to turn left and then you drive off a cliff. You got to be able to know how to do that on your own. Trading is basically the same way. All right. Next on the list is using intraday charts. Using intraday charts is something that I started to do a lot more of last year, and I also did that in conjunction with setting alerts and waiting for volume when those alerts would trigger. So here is another great example and of a trade that actually triggered earlier today. This one right here in app. Now, I don't know if app is going to finally make the turn here or not. So far it's looking good. So far it broke out earlier today above my entry. I set an alert at 342.60 and I waited to see will volume come into this thing. And as price was breaking out, and to use the intraday chart here, I saw that yes, volume was pretty heavy on the breakout. So I decided to buy some of it. I don't know if this is going to turn out to be a winner or a loser, but because there was strong volume accompanying the breakout, it's one of the things that starts to add a little bit to the probability that yes, it will work out. And that's all you need. You only need that slight edge because some of these trades that break out will, of course, turn around and generate a loss, right? So this could turn south. It could basically stay flat. Maybe it gives you a little bit of a gain. Okay, fine. But some of them will go off and make very strong moves. And you only need a few of them, just like how we were looking at the stats earlier. You only need a few of them to be able to make this kind of a move. And then that's how you can have a fantastic year. By doing all these things, right? It's not doing just one thing or that one thing. It's in doing all these things that's what basically gives you your coin flip scenario where, like, let's say that you've got a coin, right? Here's a coin. And if it lands on heads, then you win $2. If it lands on tails, you lose $1. So you just flip that coin all day long and it's going to work out. But the way that you get to that level of belief in your trading system is by doing everything that we're talking about here. On to the next thing, next big do for 2025. And I'd love to hear yours as well. So please type into the chat. Let me know, what are the big lessons? What were some of your biggest lessons from 2024 that you're going to look to do in 2025? My fifth one, and this is the last one for me on the do's, and then we'll move on to some of my don'ts. Looking for multi time frame confluence. Even put together a course, a mini course last year on this, that you could go over to my website, marwealth.com, and that's there. Looking for multi time frame confluence is one of the things that can allow you to get in with minimal risk and with the greatest potential upside. Here is how that works. So back to this chart here, right? So again, we don't know which way price is going to move, but this pattern here is visible on a 30-minute time frame, on right. So just to zoom out, here's your 30-minute, here's your daily chart, here's your weekly chart. I don't know about you, but I'm able to see how price is tightening up on the weekly, right? The price bars are getting smaller as they're moving to the right. And then you have this nice reversal bar off of the 10-week line. And right now it's at the top of its trading range. Over here, I see how price is tightening around that purple line. That's the 21-day exponential moving average. And it pulled back yesterday and getting ready to pop today. And so far it has. And even down here on the 30-minute time frame, I can see, well, there's this other level. Let's make this one a little bit bigger, where you have this advanced pivot area. Well, add a couple of other markings on here just to make it a little bit clearer. And yeah, I can see how price is sandwiched on the 30-minute time frame and getting ready to make the turn. So because I've got all these different time frames working for me, I have a lot more confidence going into a trade like this. And while I'm not going in with huge size because, well, the market has been a bit choppy, I am able to go in with minimal risk. And it's in putting all that stuff together that you end up coming up with a higher probability, high reward, low risk, right? If we go back to my stats, you don't need to have huge win percentages to make trading work. In fact, if we come back over to the monthly tracker, for the most part, yeah, here's my winning percentages, right? 6-month average for the first half of 24 was only 46.89%. If we remove this outlay, I barely traded in August. I exited one trade. If we take that one out, then we're at about 42%, right? So that's my winning percentage. I'm close to winning half my trades, but a little bit less than that. I'm still able to put together a fantastic year. The reason why is because when you compare the average loss to the average winner is more than twice the size of the average loss over the first half of the year and for the second half of the year. Second half of the year got a little bit better. And that's how you're able to really build out and compound and do fairly well for yourself. Any thoughts or comments or questions on any of that? See, my friend Minnie's Bub, Happy New Year. Let me know what questions you guys have. And also, I want to hear your biggest do's from 2024, things that you will continue to do in 25. And let me know also things that you're not going to do, right? So here are some things that that I don't want to do in 2025. Number one, size the same on every single trade. That just makes sense from what we were talking about earlier, right? Using progressive exposure clearly works. If you're sizing up during the periods when your trades are working, you're going to dramatically outperform somebody that's just sizing the same all the time, whether our trades are working versus when trades are not working, just staying that same flat line. That's basically, it almost becomes a recipe for being a boom and buster. Well, when I started to implement more progressive exposure in my trading, that's one of the things that helped my trading improve substantially. Here's another popular one, buying in because of the name. That's one that I hear floated around quite a bit, to be honest, especially within the fintech space, particularly among the growth stock traders. A lot of people will go and say that, yeah, you just find the leader, buy the leader, and it doesn't really matter as much when you get in. It's just being in the leader and making sure that you ride it up and participate in the bulk of the move. I think that if you have the other components of a strategy for that can work. But if you're most people that are probably tuning in, and let me know if this is you, you're probably a beginner, maybe you're an intermediate, maybe you have somewhere between a year's experience, maybe you have 5 years experience, a little bit more. But if you're trying to take some stuff from this and some stuff that that guy's saying and trying to do too much all in the same time, and if you haven't gone and done the put together the spreadsheets and dug into the data and doing that kind of work yourself, then it doesn't work, right? And I know that because I've tried that path, and trust me, it does not work. When it was first starting out with CanSlim, I thought that I would just buy Apple, right? I told the story. So if there's any of you that are from the accelerator program that are on here now, welcome. You heard the story maybe about an hour or so ago. When I first found the New York City IBD meetup, I had already read William O'Neill's book, How to Make Money in Stocks. If you haven't read that one, you've got to read that one. But I read that and learned about different chart patterns, saw that Apple was setting up in a very nice looking cup with handle. So I decided to buy that one. And the market may or may not have been very strong at the time, but this trade was getting ready to break out and move. And so I bought it. And of course, watch it happen. The next day, price is down about 4%. And I'm looking at that and I am freaking out. Why? Why would I freak out? Price is only down 4%. Well, because I have my money in there and it's 4% of my money that's down. And while it sounded great at the time, and it's a leader, and it's Apple, and it's one of the biggest stocks in the market, well, I didn't have the conviction in what I was doing yet to say, oh, it's only 4% and move on with the rest of my day. So it's really comes down to what our beliefs are. And if we're buying into something just because of the name, well, you better have a whole belief structure that says that, yeah, I'm the kind of person that can buy this and sit with it And if it drops however much and know what that however much is beforehand, that you're able to sit with it and be okay. And also know, well, if it drops this much or if it goes sideways for this long, I'm okay with it. Maybe it's not Apple for you right now. Maybe it's Bitcoin, right? The Bitcoin is one that I've had a longer term position in. All this stuff can work. So much comes down to our beliefs and our belief systems and how strongly rooted those beliefs are. That's really why I wrote this book here, The Trading Mind Wheel, because eh, there's not there's more psychology books coming out there. Uh, There's a lot that talks about emotions and trader psychology. There's not a ton that talk about it from the perspective of beliefs and belief systems. And when people talk about emotions, and I'm going off on a little bit of a tangent here, but I think that it's worth it. When people talk about emotions, oftentimes they'll talk about emotions like it's a bad thing, that you need to turn off your emotions, trade like a robot. Honestly, I don't think that that's a good way to approach it. I think that our emotions can be a very powerful tool if we learn how to use them and if we understand the beliefs that are driving the emotions that we have. If you're getting fearful, like I was getting fearful in that Apple trade that I was telling you about many, many years ago, the reason why I was getting fearful was because I didn't know what I was doing. So it makes sense for me to be fearful in that scenario, right? If I don't know what I'm doing, if I don't know how to drive a car, but somehow I'm find myself behind the wheel and we're about to go into a tree and I don't know what to do, I should be afraid, right? And if you're the passenger, you should be afraid too. So understanding what is driving the emotions that we have, whether it's fear, whether it's jubilation, right? Understand our beliefs. Nenny's Bub. I've been looking at sizing trades differently. Did you ever look at Kelly criterion to find an optimal amount? Uh, I have not. What I have looked at, so I have gone through Van Tharp's definitive guide to position sizing. I read that several years ago. Well, I've learned from my own style of trading is that there's actually a couple of things that help to optimize for your optimal position sizing. The one of the big things, that's non-statistically, non-math related, is your own personal psychology. How much can you deal with as far as having the dollar amount that's on, the percentage amount that's on, seeing your equity move up and down? That's going to be part of it. Um, then also mathematically, you could start to figure out, well, how uh, what's my risk of ruin? One of the ways that I like to figure out, well, what is my risk of ruin? What size trade should I be putting on? Is by coming over to marrowwealth.com and coming over to tools, popping open the free position size calculator, and then just saying, oh, you know what? Say we've got $100,000 account. We want to risk 1% of our capital. Let's say that there's a trade that is trading at, I don't know, $250. And you say that, you know what? I find a technical stop at $249. Well, guess what? If you were to do that and risk 1%, you could buy 1,000 shares and risk $1,000, but you would need to be on 2.5 times margin in order to do that. So what this is telling us is that whoa, you're putting 2.5 times your account into this one trade, and if it doesn't work out, if it gaps against you, you could be in big trouble. So, what would you do in this scenario? Well, one thing that you could do is lower your percentage capital risk. Let's say, I don't know, let's put zero point 0.1, right? Just to have that dramatic shift. Well, now you're putting 25% of your account in, right? You've got 100 grand, you're using 25% of it, $25,000. You're only risking $100, but you've got a quarter of your account in this thing. That makes a move that could be really strong. And let's say the price does gap against you the next day. Let's say instead of dropping to 249, let's say that it drops down to 247. Well, guess what? In this scenario, instead of losing $100, you would have lost $300. But that's still just 0.3% of your account. So that's how I start to think about position sizing. Hopefully that makes sense. And if you want to try out this calculator, it's on my website. It's free to use. Here's a few other don'ts. And again, I'd love to hear what some of your don'ts are as well. Things that you did in 2024 that you want to make sure that you don't repeat. So if you have those, type them into the chat. Here's another one that's very good. Don't get distracted. Now, there's a lot of things that can distract us and derail us. What are some of those things? For me, some of those things tend to be social media. Some of those things tend to be infotainment, where I put on maybe a favorite podcast. I enjoy listening to PBD, Patrick Bet David, and sometimes I'll put that on when I'm trying to do some busy work. But well, what happens? My focus is split. So am I really giving the task that I'm trying to do is the attention that it deserves or requires? Could I be doing what I'm trying to do a little bit better? Probably, right? Because my focus is split. A lot of people fall into the trap of getting distracted by, well, what's somebody else posting on social media about the stock that I have on? What's the news saying about the stock that I have on? My stock is doing something unexpected. Did Let's check the news and see what's going on. Maybe something at the broader scale. Maybe Powell said something. Anything that is not in what I call the trading business plan, a document that outlines all the things that we're going to consider for our trading, all the rules, all the stuff that we're going to analyze, the types of setups that we're going to take, how we're going to position size, all that stuff. Even throw an emergency plan in there, like what happens if the lights go out, right? What happens if the power turns off? What happens if your broker goes down? Well, what are the backup plans? All that stuff goes into the business plan. If it's not written in the business plan, then I count it as a distraction. So when we draft up our business plan, we could put literally anything that we want in there. But anything that doesn't make it in by default is a distraction. Here's another question from Minis Bob. Let's see here. Do you trade on margin account or cash? I use it to keep less money on a brokerage account, but still maintaining the same percentage risk. I do both. So I've got my IRA, right? So IRAs have to be cash. And then I've got my other accounts. My other accounts, I use margin. On my other accounts, I'll also I'm able to trade options on my IRA, but I also trade options and use leverage to do that sometimes too. There's all the different tools I'd be willing to use. To short stocks, you need to have margin on your account. I very seldomly short, but in order to short, you do need margin. So I'll have that on my account when the time arises for that. The way that I use margin is I will still size my trades as they're supposed to be sized. But when, say, we're in one of those market environments where everything is working and more trades are still coming on, and I want to put on another trade, and I'm still sized pretty well, right? I don't want to have 20 different positions on that are all small. I would much rather have 5 or maybe 10 positions that are fairly large, because when it starts to get, when the numbers get too big, and for me, my sweet spot tends to be about 5 or 6. When it starts to get beyond that, it gets a little hectic. I'll still go like the most positions I've carried last year, I want to say was maybe about like either 12 or 14, but that was extreme. I would much rather carry fewer positions with greater size. That's how I'll use margin when I've maxed out the number of positions that I have on and I want to put on another one, then that's when the margin will be used. Here's another question from him. Uh, how did you trade in the 2022 bear market, kept cash and just waited on the sidelines? How did you maneuver that market environment? So for that one, I was short. That when we're in a bear market environment, then it's time to short. So how do you know that you're in a bear market before you're in the official bear market, right? Because we don't know if you're going by the textbook definition of a bear market is when the market drops 20% or more. So if the market's already dropped 20% or more and then you start to short, well, you might be very late to the party. So how did I know when to short? Right? If we take a look over at the charts here and pull up, let's see. How did I know? This is how I knew. Right? So you remember all those red and yellow and green conditions? I take the time to just overlay it on the NASDAQ for when the market is shifting from red to yellow and green and all that stuff. So the red condition actually started right here on November 17th, while the market was still pushing into highs. NASDAQ pushed into fresh all-time highs. I'm in a red condition. Why? Well, the reason why had to do with this indicator down here. This is not a magic indicator or anything. It doesn't predict the future. It doesn't predict bear markets. All this is the number of stocks making new 52-week highs versus new 52-week lows. And something that I've observed over many, many years is that if the ratio of new highs versus new lows starts to compress, meaning that, on this day here, that day there, we've got 117 stocks making new lows, 97 stocks making new highs. So the ratio is already inverted. There's more stocks making new lows than new highs, and the NASDAQ is moving up. Well, just simple logic says that that's not sustainable, right? If there's more stocks within the NASDAQ that are making new 52-week lows, then how's the index supposed to continue to make new 52-week highs? So at that point, I'm already stepping on the brakes. But it's not really until we get to about here that there's all of a sudden there's a lot of stocks that are setting up to the downside. A lot of stocks that have already started to top out, started to break down hard. So that's where I begin shorting. You could short stocks, you can short indexes. I'll do both. And it's when we start to break below major support levels, something like this over here, that's more of an ideal time to short because you're not just getting like over here when you're starting to break below the 50-day moving average, you're close to the prior high. So where you would look to cover a short starts to become very obvious. Where momentum is going to begin carrying you to the downside, that's over here. Because now you've broken through the major floor and people are starting to go into panic mode. And that's where you get a big dump like this. So yeah, that's basically that. Okay. Now here are a couple of the big don'ts that came from some of our members. Number one, don't fight the market, and number two, don't average down. So, what does fighting the market mean? And let me know if any of you have fought the market before. Fighting the market means that market is going one way, and you think that it should go the other way. Right? So if the market is going down, you think that it should be going up. So because you think that, what's the tendency? Let's put some more money in. Right? It should be going that way. Price is going down. I'm getting a bargain here. Let's put some more money into it. That is a quick way to lose a lot of money. It's also something that, it's not where you might lose. It's definitely a way where you could lose a lot, but it's also a way that you could give up gains. It's something that can happen to both somebody that is struggling, that is trying to dig themselves out of a hole, and it's also something that can happen to somebody that's gotten a little too overconfident, that they've had that wave that we spoke about at the beginning of this, and they're on their winning streak, and now they think that it's because of them. Wow, I'm doing so great here. I can do no wrong. So, now the market is starting to come back in. Well, I think that it should be going that way, and I've been right the last 7, 8, 9 trades. So let's put some more money to work and put some more money to work. And sometimes it'll happen, sometimes it'll work, but all you need is just one or two times where that doesn't work, and then you get to be back to square one, and you're the classic boom and buster. That was me for a time. It's not me anymore. You don't fight the market, don't average down, and understand that, yeah, the market does move in waves, progressive exposure, all these kinds of lessons. Here's another one that came from one of our members. Less is more. Stick to rules no matter what. So, how can you stick to rules no matter what? One of the things that I find to be very helpful to stick to rules no matter what is to constantly reinforce them. Put them somewhere where you're going to be able to review them and review them regularly. In fact, if you do have a list of rules, let's say that you've got a list of, I don't know, 10 rules, maybe you've got a list of 20 trading rules, rank them, right? Rank them. Like, well, which one do you think is the most important one? And why do you think that it's the most important one? Sometimes it's the most important one because, well, that's the one that I've struggled with, right? Maybe less is more is a rule, or sticking to the rules no matter what. Maybe that's a rule. So I want to have that somewhere in my face. Make like a highlight reel of your rules, something that you could just glance at throughout the day, maybe multiple times a day, to reinforce those rules or those things that you want to follow. And that way it becomes a little bit more subconscious, a little more automated, a little bit more of something that when you're in the moment about to break the thing that you're trying to do, that you remember somewhere in the back of your mind that you know what, let me take a step back, maybe let me make sure that I follow the rules that I've set for myself. And if you're able to do that, even if you're not perfect with doing that, even if you're able to increase it just a little bit, well, guess what? You're that much better off in 25 than you were in 24. So I think that is about it for me for today. Let me know if you've got any other questions that you'd like to go over. If you haven't already signed up for our newsletters, make sure that you get the newsletter. The newsletter is free. It's on marrowwealth.com/newsletter. And of course, if you haven't already done so, and this is something that I need to do a much better job of, make sure that you like and comment and subscribe to the channels wherever you happen to be watching. If you're on YouTube, if you're on X, if you're on, well, let's see what people are tuning in from. Yeah, today, YouTube and X. Make sure that you are subscribed to those platforms. Make sure that you're following. And yeah, the more that you like and comment, the more that it helps to bless this out to other people. So I assume that you guys found what we're talking about valuable. Well, otherwise, well, why would you be here for so long? So go ahead and like and comment and do all that good stuff. All right. So that is it for me for now. I hope that you have a wonderful 2025. If you have any questions at all for me, please send them in. I'm here. I'm glad to help. Until next time, take care. Much love and God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.